Good morning, it is the 25th of January. First thing is, I know how so many people want my service, but not everyone can afford it. So, I've come up with a great idea. Rewards scheme. Sign up for the rewards scheme and earn points by sharing your referral link and getting other people to also sign up for the reward scheme. Now, they don't have to pay any money either. They just sign up for the referral scheme and collect all the free ebooks, and then they will earn points like you and be able to claim more free ebooks. If you collect enough points, you can actually get a free subscription. You can even get my course for free. All you got to do, get people to sign up for the referral course. There's no money involved whatsoever. It's completely free. Have a look in the description box. You've got the link there. It takes 2 minutes. All you need to put in is your name and your email address. It could not be quicker. Let's get on to the stock markets first. Everyone's been trying to figure out where the stock markets are going. All over social media, stock markets are going up, stock markets are going down, recession is coming. Why doesn't the market believe that the Fed is going to keep rates high? I've been stuck on the same narrative. But what I think I'm figuring out is that the stock market doesn't really seem to care anymore. We're in a consolidation phase. Now, you don't know you're in a consolidation phase until you've touched a trend line 3 times, because that's what makes a trend line. So we're only actually at the early phase or maybe the middle phase of a sideways consolidation. Don't forget, all financial markets do spend significant periods of time in sideways consolidation phases. I think that we have to prepare ourselves maybe for some sideways consolidation throughout the whole of the summer period. Now, day traders can still make money, but obviously we're not going to be looking so much at swing trades. We can still scalp on a day-to-day basis. It doesn't have to be an hour-to-hour basis because the ranges are quite wide. This is the Nasdaq sideways range. Even the moving averages have really started to flatten out over the last month or two in the Nasdaq. We've touched this trend line for the 3rd time. Now, this black trend line is the short-term one, and I've got a white trend line going back to April. That's also acting as a resistance level. And we've got the red 200-day moving average also acting as a resistance. We almost have a morning star pattern, a big green, a little red doji, and a potentially big red candle forming today. And if we do get quite a big red candle today, this would suggest that the market is reversing at this resistance level. Now, it doesn't necessarily mean the market's going to crash. We may only come down to 11,500, a few hundred points, and it may bounce because I think we're probably establishing a sideways range. Now, I can put Fibonacci levels on that little move up that we've had through January. We get a 23.6% around 11,715. A 38.2% fib at around 11,530. So 11,530 might be as low as we go. We might then turn around and range here for a little bit. You get what I'm saying. The lower trend line comes in just above 10,800 at the moment. It's rising very slowly. And if we dip down there, then we could bounce. It could be weeks and even months that we remain in this triangle that you see in the Nasdaq. Now, I think every analyst in the S&P has been focused on the 1-year trend line, goes back to January, this black line, which we've broken above it. Now, it is a buy signal because we have broken above a 1-year trend line. We have broken above the 200-day moving average. We were already above the 100-day moving average. People are now thinking, oh, we've broken above the trend line. This is it. The bull market's back. Stocks are going to soar. Time to pile in. But that may not actually be the case. We even broke above last week's high. We didn't race away. And I think it's indicative of the fact that we're in this sideways triangle. I think this is the pattern that actually matters. That 1-year trend line doesn't matter anymore. Now, if we do break above, say, 40.90, that would be more positive, and the E-mini S&P could run up to 41.60, 41.90 quite quickly. But what I'm telling you is, don't expect big moves. They may not be coming now. Dow Jones also now apparently forming something of a triangle pattern. Of course, we didn't know until we got the 3rd test at the end of last week. The triangle pattern is a lot smaller, but still a clear consolidation over the past 3 months. Again, moving averages flatlining on the daily chart, the 100, the 200 and the 500. Let's have a quick look at the weekly chart. Now, with all the talk of higher interest rates, high inflation, recession, blah, 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 you would think to yourself that the stock markets have really been suffering, but they just haven't. When you look at a weekly chart, that pullback really just no big deal. It's not even as brutal as the COVID pandemic pullback. But look, when I put trend lines on there, I think you can see. So I probably need to put a trend line on here as well. I could probably litter the thing with trend lines indicating that we're probably going to remain in a sideways trend for the Dow Jones as well. I'm going to go back to the Nasdaq. This could be a bear flag, but it's becoming quite a long bear flag. You can see the channel that we're in. Even the weekly moving averages are quite flat in the stock markets. We do have resistance at 12,000. I think I did point that out on the daily chart, and you can see it clearer on the weekly chart here. There, you can see that we do have resistance around 11,950, 12,050, which I've had on my report all week. It worked well yesterday. We got a high for the day exactly at that resistance level. We've even got a trend line going back to 2015. So it's a 7-year trend line that we broke below, and we're now holding below it. So there is still a negative tone to the Nasdaq on the longer term charts, but as I said, my suspicion is that we're just going to continue in the sideways trend that we have very well established over the past 4 months. The FTSE actually broke above the 2022 high this month, and is holding above it even though we did have a big down week last week. So quite incredible. I think the stock markets appear to be a little bit detached from reality, especially in the case of the FTSE, but you can't argue with the price action. Okay, so that's it. That's my view for the stock markets. We'll see if I'm right over the coming days and weeks. Don't forget to sign up for my reward scheme and get yourself some free ebooks, a free subscription, and who knows, maybe even a free sign up to my trading course.